From London, this is the Standard Podcast, and I'm Mark Blunden. Coming up in this episode, why Friday the 13th could be lucky for London house hunters. But first, Transport for London has admitted a cyber attack hitting its IT systems is much worse than initially thought. Evening Standard Transport editor Ross Lydall reports the hack is understood to potentially have exposed the bank details of about 5,000 passengers via activity on their Oyster card account or refund data. It comes as the National Crime Agency arrested a 17-year-old boy under the Computer Misuse Act in relation to the attack. To discover more, Ross Lydall joins us now. Ross, what's the latest we know about the circumstances?
I've just spoken with Shashi Verma, who is TfL's Chief Technology Officer, and on the sort of very basic question of how long is it going to take to fix this, I'm afraid the answer is we don't know. He was very honest, and he simply said it wasn't the case of it's as long as a piece of string, but at this stage, they simply don't know how long things will be impacted. It's been a sort of modest to medium sort of size impact on a number of passengers, especially those looking to use the TfL website. And the sort of headline or most alarming part of this hack is that about 5,000 people who would have been in contact with TfL, probably having received a refund on their Oyster card, may have had their bank account number and sort code exposed to the hackers. But by and large, most people will have not been too badly affected by this, but will have received an email from TfL telling them about the hack. But in terms of how long will it take to clear it all up and get back to normal, at this stage, they don't know.
And what of the investigation? There's been an arrest.
Yes, so we know that this happened on September the 1st. And that hacking activity was then spotted by TfL on September the 2nd and September the 3rd. Now, Shashi Verma didn't want to say exactly what this hacking activity involved because there is an ongoing investigation by the National Crime Agency, and it feels like the NCA is probably slightly ahead of the game in understanding what the hackers were up to. TfL, for its part, is having to essentially clear up the mess. Now, what Shashi didn't want to do was to give the hackers sort of more credit than they were due in his sort of phrase. He feels that most of the inconvenience that's being caused to passengers now is through TfL's own actions to essentially pull the wires out from behind the telly, if you like, and disconnect many bits of its own website to prevent the problem getting worse and essentially to stop the hackers in their tracks. So rather than a direct impact of the hackers themselves, he said, for example, the hackers haven't actually achieved anything. They didn't bring the tube down. They didn't bring the bus network down. They haven't made demands for money. We haven't paid any ransom money. They haven't actually done any damage. This damage has been secondhand, caused by TfL itself. And damage is sort of mean inconvenience, really. So nobody's actually lost money yet, as far as we know. Nobody has had thousands of pounds taken out of their bank account, but obviously a lot of inconvenience has been caused. The other thing to say, of course, is that yesterday we found out that a 17-year-old teenager had been arrested in Walsall in the West Midlands by the National Crime Agency. Now, what was interesting is that this arrest was actually made on September the 5th, so a week before this lad was arrested, and he's since been bailed.
Are TfL offering any advice to people concerned about their data being compromised?
Yes, so in addition to the email that would have been received by about 6 million people yesterday, which essentially informed them that this hack had been discovered, though 5,000 whose bank details may have been exposed, they will receive communication in the next day or two from TfL giving them more details. What TfL is actually concerned about here as well is to warn Londoners to be aware only to look out for TfL communications. The concern is here that because other mischief makers, bad lads and so on know that this has happened, they don't want another sort of phishing attack to then happen and for people to essentially piggyback on the back of communications that TfL is now sending out to many Londoners talking about this. So they're saying, we TfL will never ask you in our communications for your bank account or sort code, so beware if anybody does that, or if you get an unexpected text message on your phone asking for that, saying that will not be us, do not sort of share your details. The other thing to say is that in practical terms, One of the things that people can't do just now is get new Oyster photo cards. This applies to children and teenagers who would require a zip card to get free travel on the buses and child rates on the tube, and also older Londoners who might be applying for the 60 plus Oyster card. So both of those applications for new cards are on hold. What TfL is doing as an interim measure, and this has only just been emerging today, is that, for example, TfL will be advising all bus drivers to look out for children, and if children who are entitled to free travel on the buses don't have a valid Oyster card, or a valid zip card rather, simply because they can't get hold of it because the TfL website is not operating fully, these bus drivers should allow the children on the bus without question.
You've also been reporting on the ongoing issues on the Central Line with the rolling stock refurbs. What can you tell us, and also about the impact to journeys?
The Central Line, the bane of my life. Luckily, I don't get it too often, but every time I do, when I pop over to Leytonstone, which is my nearest Central Line station, there tends to be rather longer waits for a train than there are on the rather more rapid Victoria Line. So probably since March time, the Central Line has been running a reduced timetable because it hasn't got enough trains in service. The idea then was that they would deliberately curtail the timetable so that the gaps between trains would become more regular, essentially smooth out the gaps so you wouldn't have really big gaps. But the situation remains that not enough trains, which are essentially 30 years old and are requiring refurbishment, have come back into service. Now, TfL wants brand new trains but can't afford them, so it's embarked on a £500 million refurbishment programme for the Central Line trains to try and keep them running for the next 10 or 15 years. Only one train so far has been refurbished and has returned to the tracks. So there's a rather long wait, and a longer than expected wait, for these trains to come back out of the depot looking all shiny and new. And you'll spot them because they've got new moquette seats and sort of new lighting and CCTV on board. So this repair and refurbish programme is rather behind schedule. This means that the new timetable for the Central Line won't arrive until about Christmas time, when there should be more frequent trains, a more frequent service, and fewer gaps between service.
Let's go to the ads coming up. It's Friday the 13th, but that might not be so unlucky for property hunters trying to negotiate a mortgage. Why not hit follow on this podcast in the meantime and give us a rating? Welcome back. A new wave of fixed-rate mortgage cuts is on the way for lucky borrowers on Friday the 13th as home loan costs continue to fall. Evening Standard business editor Jonathan Prynn reports major high street lenders TSB Nationwide and HSBC say they will cut their rate across their range of fixed-rate products in the latest flare-up in the mortgage price war. And let's find out from Jonathan now about the significance of these rate cuts.
Very interesting day today, Mark. It's Friday the 13th, obviously, traditionally a very unlucky day, although I was born on Friday the 13th, so it's been good for me. But a lot of lenders today are bringing good news, good luck to borrowers and buyers, because rates are coming down, fixed rates on mortgages from quite a wide range of lenders, including really big names such as HSBC, TSB, Nationwide, but also some smaller players as well. So, yeah, I mean, there's a lot to be pleased about if you're a first-time buyer or looking to remortgage.
And what are some of the figures that are being offered?
For example, HSBC are reducing their headline 5-year fix to 3.82%. That's down 0.15 of a percentage point. But 3.82, anything sub 4% is we haven't seen really since before the famous or infamous mini budget. So that's a really good rate, bearing in mind that the best rates are always for people with the biggest deposits. Normally, to access the very top rates, you need a deposit of at least 40%. But that said, they are also doing rates of around the 4% mark for people with a slightly smaller deposit, 25%. You can access around 4% money. And TSB also, they've taken 0.3% off their headline 5-year deal. That's now 3.79%. So, you can see there are more and more lenders that are now going sub 4, and for buyers and borrowers, that's just, really good news.
What will these new offers mean for property hunters in the capital headed into the autumn?
It's slightly mixed news. It slightly depends on when your remortgage deal comes up. Actually, I should say for first-time buyers, it's just unalloyed good news, because first-time buyers obviously not remortgaging. They're taking out a mortgage for the first time. And over recent years, they would have been looking at 5-6% maybe. Now they're looking at, if they're lucky, high threes, 4.5 maybe. So that's a significant difference in the costs and their repayments that they'll be looking at once they have bought their property. For people remortgaging, it's a slightly different picture. If you took out a 5-year fix 5 years ago, the chances are it would have been incredibly cheap. We were living through an age of unprecedentedly low mortgage rates. You could pick up 5-year money for 1%, 1 percentage point, 1.5 maybe, and you'll probably be remortgaging into something that's more like high threes, 4, low 4s, 4.5. So from that point of view, it will be going up. But on the other hand, it won't be going up as much as it might have been, a few months ago or a year ago. For people on 2-year fixes who are remortgaging, rates are already going up when they took out their mortgages 2 years ago. So they won't be seeing such a big increase when they remortgage into these rates are available now. So it all depends on your particular and personal circumstances. But the big picture is that rates are coming down. Money Facts, who are extremely well-respected analysts on this, they said that the average rate on a 2-year fixed mortgage fell today to 5.49%. Now, that's the first time the average has been below 5.5 since June last year. So, we really are entering much, much more benign waters.
And what's the economic weather that's made these small cuts possible?
The real background story is that the inflation that has been so destructive over the last 2 years, hit 11% at its peak, is now way, way down. We're down at 2% almost. We're back in the territory that the Bank of England wants inflation to be in. And that means that the Bank of England can start to release and reduce and ease the level of interest rates in the economy. They've done one cut already. We saw that in August from 5.25 to 5%. The markets are widely expecting another cut before Christmas. Will it come next week when the bank's Monetary Policy Committee meets? Probably not. It'll probably come in November. But what the markets are saying is that we can see, looking ahead, that the Bank of England will be cutting rates quite dramatically. Because of that, we can lend money to the borrowers, the mortgage holders, the house buyers, the remortgagers, all our customers. We can lend money to them at a slightly cheaper rate. So it all stems from the war on inflation and how that has effectively been won or is close to being won, and interest rates coming down on the back of that.
There's much more news and features at standard.co.uk. That's the Standard Podcast. We're back tomorrow, Saturday at 4 p.m.